Hi, hello. I think that perhaps we can wait a couple of minutes because people are still joining us. So if you agree, we can wait 2 minutes and then we start. Okay, so I think that we can start because I'm sure that more people will join us, but some of them are waiting here. They were really, really punctual, so I think that we should start. So thank you very much to all our attendees in this webinar, and thank you so much to our speakers and experts, all of them members of the Spanish Business Council. I think that this is one of the best things of this council, and I imagine all of them, the generous people that share their knowledge with the rest of the members. This is the clue for this kind of community and platform to grow and to be success. So we are today here to talk about the new UAE corporate tax. What does it mean for your business? I think that it's a very important issue. All companies in the UAE are asking us and to our members. So I think that the speakers today are going to share very important information for you. We know that everything is not clear yet, but with their expertise and their knowledge, I'm sure that they will share with us some very important points. So here today we have Luis Felipe Arango, Managing Director of Whitehall and Company, Martín Gómez, Managing Director of RLD in English, Markos Brotzakis, Managing Partner in Gulf Tax Consultants, and finally Xavier Solanes, Senior Associate in Tax in Tamimi. So the first thing I want to make today is to give you the floor, guys, because I want to invite you to share with us briefly a headline about what do you think is the more important, the clue about this new corporate tax regulation. So we start with Luis Felipe. So please go ahead. Your main message, goal, objective for our audience today.
Thank you very much, Amaya, and thanks to the Business Council for this invitation. As you said, my name is Luis Felipe Arango, and as Managing Director of Whitehall & Company, my task is especially related to what the tax brings for us, to prepare companies and share knowledge along the community, to be prepared for those changes that are coming. I think that the silver lining and the most important thing that we will have is the availability of information from the regulator, that it will be the very first time that the regulator has almost complete access to the financial information of private companies. And you will see that the discussion goes along that way more than ever. Thank you, Amaya.
Great. So now we continue with Martín. Martín, please go ahead.
Good morning, everyone. And thank you, Amaya, for the invitation to participate in this webinar with all these colleagues that are experts in the subject. For me, I would like to say that from a few years ago, we've seen that the UAE has taken steps to be more similar, to other jurisdictions and other countries, first with the introduction of the VAT economic substance, and now with the announcement of the new corporate tax. I think this is good news for the UAE. It will for sure help to boost the UAE economy and the companies established in the UAE. And it will also remove this tag that the UAE has of like tax haven for many jurisdictions. Even for Europe or Spain, it's not a tax haven, but it has this tag. And with this new step, we will have a new corporate tax that will be low compared to other countries. And I think it's a good step for the future of the UAE and the UAE companies.
I don't know if everybody agrees with it, but let's talk deeply in the 45 minutes we have ahead. So Markos, please.
So, good afternoon, ladies and gentlemen. Thank you, Amaya, for inviting me to this event. So, we are talking about introduction of tax, but UAE had corporate income tax for oil and gas business and for the branches of foreign banks. So, we are expanding this to the rest of the business community. How I see this, I see that actually the corporate income tax is going to align UAE with the rest of the world, and actually is going to help take out UAE from all these black and gray lists that the European Union and the US have from time to time put it. The drawback is that business here are used to zero tax, and now they will have to add one more expense, enhance their compliance, and at the end, they will have to do a very serious tax planning at corporate level in order to be able to accommodate the new corporate income tax in the UAE.
Great. So now Xavier.
Too much.
No. So now Xavier, please go ahead.
Thank you, Amaya. Thank you, the Spanish Business Council, and thank you, the attendees, for joining us in this hopefully fruitful discussion. My headlines would be: first, it's not a corporate tax, it's an income tax, which applies on companies and potentially also applies on individuals. So that's very important to keep in mind, because there may be situations where individuals may fall within the scope as well. The second is there's limited availability right now, but it seems, or at least from the limited details, it seems that it will apply on a worldwide basis, not just on a UAE territorial source of income basis. So that's also important to keep in mind. The third point is, and I agree with the speakers, is that it will likely trigger very light liability in terms of the corporate tax and very light compliance. No advance payments, no withholding tax. So it's going to be very light, presumably, but at the same time, there's going to be some tax compliance, at least to a certain degree, and there's going to be tax advisory needed to restructure things, to think how the businesses conduct business, to think whether one structure or the other is the optimal, whether mainland, free zone, what about the activities, the IP, etc. So the overall burden is going to be low, it's expected to be low, but there's going to be some input on tax required. So my best recommendation would be to, once the details are out and released and published, the guidelines, the laws, the regulations, then would be a good time to seek detailed tax advice on this law. Thank you, Maya.
Thank you very much, Xavier. I'm sure that they will. So now we are starting with the questions. I invite the attendees to send their questions in the Q&A box that we have in the webinar. So I'm starting to share different questions to our experts, to our speakers. But if you want to introduce a new question and I see that is related in that moment, we will be very happy to introduce your questions in the dialogue. So we start from scratch, from the beginning. Martin, what is the new corporate income tax to introduce? How will it affect salaries and income? And I'm sure that perhaps there will be some exceptions. Can you explain?
Yeah, sure, Amaya. So what we know so far is like UAE is going to introduce one corporate income tax that it will affect all businesses established in the UAE. business activities and business license. So it means it will affect mainland companies or free zone companies. And this, what we know so far is that it will affect the taxable profit above 375,000 dirham. Taxable profit will be like the net profit minus deduction that will be published in the regulation, and we will know once they are out. And this is what we know so far. It's true that there will be some exceptions, for example, like salaries or personal income that is received and is not involved in a business permit or a business license will be exempt. We know that for sure. And as well, like for some other businesses, like for example, like the extraction of natural resources, that they already have one tax. So it will be subject to the current tax decrease and it will not change. So basically, this is all like we know so far regarding this. That there are some tax rates and different brackets and everything that I think we will see.
So our next question were exactly this: the tax rates and brackets. When is going to be effective?
So it will be effective. It will start for all the companies whose tax year, financial year, start after the 1st June 2023. It means that most probably for most of the businesses, it will apply from the natural year of 1st January 2024 to 31st December 2024. And the brackets, we could say that there will be like three kind of brackets. The one will be 0%, that it will be 0% for all the taxable profit below 375,000 dirham. Then will be like a second one that it will be 9% for all the taxable income above 375,000 dirham. So it means, for example, if the taxable profit of that company is like 400,000 dirham at the end of the financial year, this 25% that is above 375,000 dirham will have a tax of 9%. So this, and a third one will be, and we don't know yet, will be for multinationals and large companies that we will see how it goes, but most probably will be a third bracket for this kind of companies.
Okay, so this is one of the things we don't know yet, but I'm sure that we will know soon. So now next question will be for Xavier. And will UAE apply withholding tax? How will tax credit will be used against taxable income?
Thank you, Amaya. Now, in respect of withholding tax, the answer is simple: no. The UAE has announced that it will not apply withholding tax. In most other Middle East countries, withholding tax applies on payments to overseas, to outside of the country. And in some Western jurisdictions, there's even withholding tax on domestic payments, let's say for financial transactions, interest, loans, etc. But the UAE has announced that no, it does not intend to impose withholding tax. So that's clear, at least at this stage. We don't expect the regulations to include any caveats or exceptions, but at least the statement so far that we know is that no withholding tax. When it comes to tax credits, typically there's two main tax credits that can come to mind. One is double taxation credits, and the other one is tax losses, so to speak. So double taxation credits, double taxation, and here perhaps we can take one step backwards. Double taxation can be economic double taxation, which is when the income is subject twice, the same income is subject twice in the hands of two individuals. So for instance, if company A makes profits, that company is taxed. And if company A distributes dividends above, then the top company is taxed again. That is one type of double taxation. And the other one is juridical double taxation, which is when the same person is taxed twice. Let's say one company generates income in country A, then there is withholding tax in that country incurs withholding tax, and that company is subject to tax again in his residence country. That is juridical double taxation. When it comes to tax credits against this type of double taxation, there's two types. For economic double taxation, the UAE has announced that it will grant an exemption for qualifying dividends and for from capital gains derived from the transfer of qualifying shareholdings. So that's the way to avoid economic double taxation. And then more details will be released in due course. When it comes to juridical double taxation, the UAE has also announced that it will grant relief from withholding tax incurred in the foreign country. Now, would that apply to all kind of withholding tax? The answer is no. The main condition, and we expect this to be detailed in the regulations, is that the credit in respect of which withholding tax relief will be available should be in respect of income that would be subject to tax in the UAE. So if, for instance, there is withholding tax on dividends and that tax is exempt in the UAE, potentially the UAE would not allow that tax credit to the taxpayer. This is something that we will see. This is something that still has to be regulated in detail. This is known as the credit method, where you integrate, the company integrates the income and then it applies a credit in its tax return. Also, to keep in mind, and this is something that companies should look at, is how this will interact with double tax treaties that the EU has entered into, because there's more than 120 double tax treaties. So that also to keep in mind. That's in respect of tax credits for double tax against double taxation. In respect of tax losses, which is the second tax credit that we mentioned, the UAE has announced that yes, it will allow companies to use previous tax losses incurred from the date when the corporate tax comes into force onwards. So from June 2023 or January 24, depending on the company, in respect of the tax losses incurred from that point onwards, the company should be entitled to benefit and use those tax losses against future tax profits. Again, more detail will be released in due course. Thank you, Maya.
Thank you, Xavier. Very clear. Thanks a lot, because it's not I think it's not an easy topic to follow, but you were back and forth explaining very well. Thank you very much. And now we have two questions for Luis Felipe. So how will the CIT 0% rate in respect of the first 375,000 be calculated? And then I want to go for the next one in order not to interrupt you. Are there any benefits from this new taxation? Martin introduced something at the beginning about, politics, but what do you see this topic?
Yes, thank you, Maya. I think both questions do belong together, so I will answer them accordingly. The CIT corporate income tax rate of 0%. I build on what Martin has said at the beginning and what my other colleagues have said. What we're doing today is a bit of guesswork on how the regulation will look like, but it is an educated guess nonetheless. We know how neighboring jurisdictions have implemented. We know what are the taxation trends, so we're able to foresee a bit what would make sense for the UAE, just for everyone to keep that in mind once more. And that's where I'm going to come to question number one, the calculation of that threshold. So that means that the first 375,000 dirhams, and that is roughly $100,000. That's how the FTA and other GCC countries calculate these thresholds. For the VAT are very similar thresholds in mind. $100,000, 375,000 dirhams will be free from that sort of taxation, not to deter the financial health of SMEs. That's what's happening. So we will see, I think, like in the fashion of the implementation of VAT, that considerations, that interpretations of cases will be published as we go. So the FTA will see from how the implementation goes and will tell us, okay, if the owner works in the company, some salaries might be deducted, some might not be deducted, these kind of things, which I think it's in everyone's mouth and mind saying, I will just get down everything as my own salary. That will most certainly not work, I can tell you from now. This kind of calculations will be published so that really legitimate companies that do have this profit will be calculated. But then at the beginning, what I think is we'll have at the beginning this $100,000, and when companies fall below that, corporate tax will not be there, and then from onwards 9% and 15% somewhere else. It works pretty similar to VAT. Now, going over to question number 2, the benefits. Besides the political benefits of aligning ourselves with other countries, I'm gonna focus a bit on the internal benefits that happen. I think that our companies must become a bit more disciplined when it comes to reporting. Big multinationals already have to do so because they're part of a group of companies in other countries. But talking about SMEs and local conglomerates, we will see them having to trim down, having to be disciplined about the reporting. I want to focus on what I said at the beginning. This is the very first time that private companies in the UAE will have to disclose audited financial statements to the regulators. Very first time ever. For me, the biggest shift is even bigger than the 9%. Regulators will have access to our audited financials. For the first time, when the VAT was introduced, they started to have access to some financial information, what we purchase with VAT, what we're selling, but not to everything, assets and such. That will also trim down some companies that perhaps I'll just call them zombie companies that are kept alive through various methods in the economy. And I don't want to be political here, but this will enable disciplined, legitimate companies to thrive, because it might just kick out some players or get them out of the system, and legitimate SMEs will have an easier time doing business. So that's one of the benefits. It will also force us to have those audited statements. And I think I'm a true believer that audited statements and constant conscientious reporting that follows international standards, as it already does in the UAE, will give company owners and managers information to be able to manage their affairs better.
Thank you very much, Felipe. I think it's very interesting to see how companies are going to do now with this new information that should be published. We continue with Xavier. Xavier, let's talk now about the free zones. What do we know about the free zones companies?
Thank you, Amaya. So the first starting point is that corporate tax, or income tax rather, will apply to all companies across the UAE. Now, the exception is that the UAE has announced, the Ministry of Finance has announced that it will continue to respect the existing tax holidays in the free zones according to the terms of those tax holidays in each free zone. And it has put 2 requirements in addition to that. Because the first requirement is that that company complies with all the regulatory requirements. And again, there's little detail on what exactly they mean. One piece of regulation of laws that comes to mind is economic substance. So for instance, if the company does not comply with economic substance, it could potentially bring the free zone company within the scope of, or not exempt from corporate income tax. That could be, we don't know yet, it's still to be regulated, so we will see. And the other condition is that the free zone company must not trade with the mainland, with the UAE mainland. So we know that many companies in the UAE do trade with the mainland, perhaps not as much when it comes to goods, but especially when it comes to services. And hence the question is how we define that trading with the mainland. Is a consultancy company in the free zone providing services to UAE mainland customers, let's say individuals or even companies, breaching or not fulfilling that condition? It's still to be seen, but potentially that could be the case. Hence the question is, and there's another question, there's the second part of the question, which is, what would you do if you would have a mainland company and a free zone company? Well, again, the first comment would be, let's wait for the regulations in detail to be published. But then once they come published, perhaps we can think of trying to restructure how you operate in the UAE, and how do you conduct business in mainland, how do you conduct business in the free zone, so as to try to mitigate those circumstances if it's possible and if it's legitimate and there's a backing reason to do that. Now, there's a grouping element as well, and the UAE income tax will also have grouping provisions. And it's a little bit unclear at this stage, how is that going to work with freezing companies and mainland companies? So that still, we'll have to see if you could group freezing and exempt freezing company and a mainland company, if that would bring the freezing company within the scope and within the net of income tax or not. So those are questions that will have to be answered in the following months, of course. Just to add to that response, the trading with the mainline point, again, there's no detail release, but from the reading of the available materials, one could say that if a freezing company trades with, let's say, overseas customers, and hence the income is exempt, and then trades with one single customer in the UAE mainland, that could potentially bring all the revenue and income of the company within the scope of income tax. So potentially, and then we will need to see more detail, yeah, that could have a serious consequences. So it's better to first wait for the regulations and then try to obtain a little more detailed guidance on how to operate going forward. Thank you.
Thank you very much, Xavier. I think it's very important to, because a lot of companies have offices in the freelance, mainline. So let's see how it works. And finally, Markos, we didn't forget about you. So what do you know about transfer pricing?
Lots of things, strange stuff. So let me give you, first of all, a small background of what transfer pricing is, because not many people are familiar with what it is and why it was introduced and why it brings all this havoc into our life. Yes. So back in the days, globalization happened, you know, business expanded, started operating across the world. So this gave the opportunity to smart CFOs to play with the tax bill of the group they were working with. So what they did, they were transferring profits from a high jurisdiction country to a low jurisdiction country. So I make a lot of profits in the US that I have a very high tax rate. Okay, let's transfer these profits. Let's do some transactions with our subsidiary in UAE and have the profits sit there at 0%. So this actually created an erosion on the tax base of the countries that actually they had the jurisdiction to tax. So the Organization of Economic Development and Cooperation, OECD, was tasked to provide a framework on the transfer pricing. Transfer pricing is actually the policies, procedures, and methodologies used to verify that transactions between controlled entities or entities belonging in a group or they are under common control are at arm's length. So what arm's length means, that the transactions are performed like being between independent and not controlled companies. So this means if SBC and me, let's say we are two companies that are under the same group, and SBC charges me 10 dirham for my subscription. Is this the right price? Is this the right price that Xavier and Felipe, being in the same business, would have traded between them? If it is, then it is at arm's length. If it is not, then we have a problem and we have to find out what's happening. So this is what is transfer pricing. So what happens in the region? Transfer pricing, which is now a global tax requirement, has entered the region since 2018, where Saudi Arabia and Qatar have, actually Qatar did it from 2020, they have introduced transfer pricing legislation. The other two countries that they have taxation in the region, which is Oman and Kuwait, they don't have a separate transfer pricing legislation, but in their income tax legislation, they have added a clause that forces intercompany transactions to be comparable to transactions among companies that are not legally or financially associated. So more or less it's everywhere. Even in UAE's VAT law, wherein the VAT law has a part that says that transactions should be at market value, where market value is defined as the price for the transaction between independent companies. So transfer pricing is there. How it's going to affect businesses. So all businesses that are under common control, and common control means I belong to a group or I'm controlled by the same family or by the same people, they will have to assess the way they do business and the way they interact between each other, meaning to see if the prices that they charge for the services or goods or financing are at arm's length and comparable. So what I expect is that at first stage, UAE is going to introduce a clause in its income tax regulations requesting prices to be at arm's length, and maybe in 2 or 3 years' time to introduce a full-fledged transfer pricing legislation that will require master file, local file, and probably some disclosures. So from a business perspective, I believe most multinationals, they have something in place because this is a global tax policy or a tax approach, but they will have to update it and review the transactions of the local companies within the group and adjust them for the transfer pricing element. So it's a lot of things and it's a lot of compliance.
Yes, we see that it's a very important topic and very related with this previous topic. How do you think that operation among sister companies in the GCC are going to be changed, or it will be affected, this?
Look, for sure, there's going to be a level that we have to calibrate operations between group companies in the region and globally, not only in the region only. So there are going to be some opportunities, but also there's going to be a lot of burden and more compliance. Let's say transfer pricing that we discussed before. Transfer pricing now, it will have to be audited. It can be audited from both sides. Until today, let's say if I had a subsidiary here in UAE and it was trading with a subsidiary in Saudi Arabia, only Saudi Arabia had transfer pricing and could check what's happening. Now, there's also a tax authority in the UAE that actually my transactions, they can be scrutinized from both sides. Utilization of tax credits, as Xavier said before. This is going to be a breakthrough. We know that there is a DTAA with Saudi Arabia, which, according to my experience and what I see, it's not utilized today because most Saudi companies afraid of the ZATCA, which is the tax authority in Saudi Arabia, they withhold the tax, they give you a certificate and they say, take it in the UAE and do something with that, which today you can do nothing because there is no income tax here. Tomorrow, you can take this certificate and offset your tax, your corporate income tax, against the tax that is withheld in Saudi Arabia. This is one. But also this is going to affect all my transactions from UAE with other entities in countries that I have a DTAA, a double taxation avoidance agreement. Third and most important, and this is going to be a strange issue. Until 1.5 years ago, many companies elected free zones to set up because of 100% ownership. 2 years ago, they published the regulations and they said, come inside, come in mainland, you can have 100% ownership in mainland. Now, many companies moved, but now you might have, due to the nature of your business, let's say you are an exporting company or a company operating outside UAE, you might have a benefit going back to the free zone and operate from there again. So what I see and what I advise all our customers is wait for the law to come out, wait for the implementing regulations to come out, and then let's plan. Tax planning and tax advisory is going to be on every CFO's agenda from mid-2023 onwards. So this is how I see things coming up. A lot of work for tax consultants. And look, if you see it, the opportunity, it might come also again from transfer pricing. Now, in these days, due to the status of the UAE, companies here are not preferentially treated regarding margins. So there might rise some opportunities that you can legally transfer profits here without creating any problems in your transfer pricing status. So that's why transfer pricing, income tax, and application of DTAAs are going to be very hot in the months to come. So that's all.
Maya, if I may, can I reply back to Markos' comment?
Yes, of course.
Yes. Markos, you mentioned one very interesting point, withholding tax in Saudi, for instance. We know for a fact that in some cases, the Saudi companies do not withhold tax according to the rate which should have been withheld because of concerns with Zatka, because sometimes they take a cautious view on what should be the rate. In other countries, let's say Western countries, because you mentioned the UAE company potentially may be able to take that withholding tax as a credit in the UAE. In other countries, and we've seen that in the West, sometimes the tax authorities deny the use of the tax credit on the basis that the tax was wrongly withheld against the treaty, the double tax treaty. So it's something that we don't know, but it's more of a practical approach in the future, but it's something that the UAE authorities could potentially follow. Of course, we're not suggesting the UAE authorities any course of action, but it's something to be seen that we've seen in other countries in the West.
Yes, it might be a case, but as we have seen from the introduction of VAT, FTA many times has taken different approaches from other tax authorities. And because it happens to have a round knowledge of Saudi Arabia, UAE, and Qatar, at the end of the day, it becomes a jurisdictional issue because it is how FTA will elect to treat that. My personal opinion is that actually UAE did not want to have the corporate income tax here. It was forced to implement it. So I believe it's going to take a very light approach to the entire matter. And also, I expect a very limited disallowed expenses list for the income taxation. Regarding now the correct application of the rate, I was referring mostly on the following two cases. According to Saudi Arabia law, you either withhold and then you issue a withholding tax certificate from Zatka, or when you file the income tax, the withholding tax return, you zero rate. So most companies are afraid to zero rate something that DTAA applies to. So I was referring to that point. So when I have to withhold tax, the 5 or the 15 or the 20%, many companies say, I prefer to withhold and have peace of mind with Zatka and the tax audit, and you have to take the burden of proving who you are and offset it in your jurisdiction. Now you have the opportunity to do that.
Yes, indeed. We'll see.
Yes, yes, let's see.
Okay, thank you very much, Xavier and Markos. We continue with Martín. Do we expect to see different rates for large companies or for Emirati shareholders? Was there any concealment law? What do you think?
Thank you, Amaya. So we know that for large companies, all these companies that can be considered as multinationals based on the OECD rules, that are all these large companies that the consolidated group revenue is above 3.15 billion dirham, they will have a different rate for the corporate income tax. We don't know exactly how much it will be this percentage, but based on the OECD rules, we know there will be a minimum of 15%. So this will be the floor for this kind of companies. Regarding the Emirati shareholders, based on the announcement so far, they just mentioned that it will affect all the UAE companies and UAE business licenses. So they don't mention any kind of differentiation for Emirati shareholder, but based like on what happened in other countries and the possibility that Emirati shareholder, once the regulation is out, they will have any kind of benefit. It is completely possible, and I'm sure they will have some kind of benefit, you know, because you know, we know how Emirati are here, you know, they are like, there are rules for everyone, and there are rules for Emirati, so probably they will have some kind of a different rate. So regarding the consumer laws, we know that there will be, as the second that was with the VAT or with economic substance, we know that all these companies that are not compliant with the corporate income tax, they will have fines and they will have sanctions for sure. We will see what will be the amount of these fines and sanctions once they publish the regulation. But you know, for example, like for economic substance, it will be like 50,000 dirham. For VAT, it's like from 10,000 dirham to whatever, depending on the amount that you didn't pay. So we will see. We will see once the regulation is out.
Okay, thank you very much. And now we are going to talk about natural person. No, we all live here in the UAE, and we want just to introduce the topic because I think that is very interesting for us. So Markos, very short, will CIT apply to natural persons?
This is the 1 million, the 1 million dirham question. Everybody's waiting for that. If I could see people here, I could say, yes, this is what everybody wants to know. So corporate income tax, and as very well Xavier said, it is a business tax. So what the Federal Tax Authority has communicated is, if you are a person, you or Maya, you would not be taxed for your salary. Or if I have a house and I rent it as a natural person, I will not be taxed. Also, if I own some portfolio of stocks and I buy and sell on my own, nothing to do there. So as a natural person, you will be exempted from tax. This is not a natural or personal income tax. But there's always a but. If I do a business as a person, then I will be liable for corporate income tax or business taxation. What this means, let's say I have a house as Markos and I rent it, and that's it. I collect the money, no income tax. I have a nice idea and I say, why don't I take a business license and make a real estate company and I buy 2-3 houses? The moment I will have the real estate license, I'm a business according to UAE law. So my profits will be taxed according to the law. So this is a very brief, let's say, description of how it is. So salary people have nothing to be afraid. Also some other categories of income, like whatever is non-business and outside, I believe, UAE, I believe it's going to be exempted if it is on a personal level. So if you are having stocks in a listed company somewhere in the world, receiving this income here as a natural person will be exempt from taxation. So no worries.
Okay.
No tax.
And what do you think, because you are an expert in this, how do you see the future? Do you think that in a short-term period of time, there will be personal tax?
No. For me, my personal opinion is no, I don't see that. What I see is that after UAE, Bahrain will come into the picture, being the last stronghold in the region, although small. But personal income tax, no, I don't believe it will come here anytime soon.
Okay.
Always look at the big brother, where Xavier is in Saudi Arabia. If they put it, then we can start discussing about that here.
Okay, thank you. And Luis Felipe, how do you think this new regulation will affect prices in goods and services?
Yes, I think in a broader discussion, more systematic discussion, this will not affect, it's not like a VAT, that's an indirect tax that you put on the services that you have. But most certainly companies expect a certain level of profit, be it a listed company because they have to fulfill what the shareholders have for such. I think the effect that the discipline effect that the taxation will have will offset most of any tendency to hike any price. So it's not that just because a corporate income tax of 9% is going to come, we will see all the prices go up by 9% because people need to still make their money and they're going to put it on the consumers. I don't think that that is how it's going to work. But we will most definitely see certain changes in the pricing, because I honestly think that some of the companies or some of the company groups, family groups that cross-finance their business with losses and keep all of these company zombies alive, they will have to be disciplined enough to be more competitive. So I don't really expect any direct increase in the price, but we will see some of it cascading down the line, and we will see things increasing just a bit.
Okay.
Maya,
Yeah.
if I may, Maya, perhaps not so much on goods and services, but perhaps on salaries as such, because ultimately it's a call from the shareholders and from the management, and the management is driven by shareholders as well. So shareholders will like a nice and generous return on investment. And if the company is making 9% less investment, then someone has to assume the cost of that. And then management and or shareholders may decide, do they assume the cost in full, or do they shift it downwards towards adjusting salaries or freezing them, or just splitting the cost a little bit in terms of future increases, etc. So I agree with Luis Felipe, perhaps not so much on goods and services out in the market, but perhaps internally within the own margins of companies as such.
Okay, thank you. Great. Thanks for the notice, Xavier. So I would like to finish now. And for the last question for all of you, I would like to ask you, how do you think a company should plan next steps to be ready, to be prepared for June 2023 or 1st January 2024? 2024, yes. So let's the final sentence, how they should plan. Who want to start? Let's see who will start.
Let me start myself.
Great.
So planning. What I believe should be done. First of all, it's good to know what we do. When these days I'm involved, let's say the last couple of years, I'm doing a lot of transfer pricing projects around the GCC. And I see many companies, when you start asking them, what is the cost structure, how do you interact with your subsidiaries, how you price and all that, things tend to be in the nexus. Nothing documented. Some people know something, some people don't know. So when you go and you do tax planning, because for sure we'll need to have tax planning here at some point in time, earlier or later, you must know who you are and what you do. So I suggest, first thing, let's somehow create a memoranda of how we work, what we do, who are our counterparties and all that. Second, wait for the law. Wait for the law and find a good tax advisor And trust me, these days everybody's tax advisor, like they used to be VAT advisor some years ago. To help you with setting up and organizing your business and the relationship with other group companies if you belong to a group. Last but most important, and we didn't discuss this, 9% is the nominal tax rate. It's actually what is prescribed in the law. Usually there is an effective tax rate, which is actually what I pay as percentage of my revenue, that might be, or my profits, that can be, that will usually is higher. So your effective tax rate probably will be around 10, even 11%, depending on what expenses will be disallowed. So it is good to know your tax structure, how you interact with the world and the other group companies, and find a competent tax consultant to help you when times comes. That's from my side.
Thank you. Who goes now? Martín, Felipe, Xavier?
Yeah, I go myself. Like, in addition to what Markos said and what Luis Felipe said before, it's very important, I think, for the companies to have all the finance, all the accounting and tidy, you know? As Luis Felipe said before, you know, before, like for the authorities, you just give part of your financials. Now they are going to see the whole picture. And many companies, because, you know, the authorities were not asking for this kind of information, they were kind of relaxed, no? And they didn't have everything tidy. So now they have the chance to put all the finance and the business structure, as Markos says, to know what they do and the finance to have it perfectly under control. So when the tax, the corporate income tax come, they have, it will be a smooth transition, and they will not have difficulties with the authorities in penalties or fines or anything like this. And once again, once the regulations are out and we have the whole information, we can provide any further recommendations or advice for the companies.
Great. Xavier.
Thank you, Maya. I would say wait for the law and potentially also the regulations, depends on how late they issue them, because we know for VAT it was almost 2 months only before the implementation date. So perhaps don't wait that much. But once the law is published at least, and if there's sight of the regulations, do not wait until the law starts. Do not wait until the corporate income tax law starts, because they may be planning, as Markos said, there may be many planning opportunities, and there may be avenues to try to mitigate, try to reduce the tax exposure. So what do we do? Do we restructure the mainland and the free zone companies? Do we have tax losses? Do we have withholding tax in other countries? Do we have transfer pricing issues? Do we have do we group? Do we don't? So all these questions would need to be discussed in 2023, most likely. I would say in the first 6 months, potentially throughout all the 2023. So my suggestion would be, let's wait for the law, but do not wait until the tax comes into place, because at that stage, it's going to be more difficult to make any changes. And these changes take time. If you restructure the business, if you restructure your contracts, your activities, your employees, these things take a long time. So that would be my bottom line.
Thank you very much. Now, Luis Felipe.
Thank you, Amaya. I'm also feel honored to be awarded the closing call before we move forward. Building on what everyone has said, which is absolutely constructive, and it's exactly what everyone should be thinking. Wait for the law, but plan early enough. Hoping for the best, but expecting the worst, so to say. That's, I think, the motto that we should learn to act in these kind of situations. I think that what we need to focus in is that obviously in an economy like this one, which is very informal relatively to other economies of the same income threshold, like the Europeans or North American ones, is that, yes, this might be seen as a hindrance to business, as more requirements, as simply a new cost that comes to business. I would see it more as an opportunity. This will enable decision makers within companies to trim down and see opportunities. And this can only happen, you can only unlock these opportunities through accurate data, and accurate data that is done by competent tax advisors, that is done by people who know the trade and can advise you accordingly. Because if you do it too late and if you get the wrong person, you might not be able to see those opportunities on how to still keep the profit levels that you have, but comply with all the tax regulations. So that's my call. It goes along with all that what my colleagues have said, but I would just like to see it. Don't see it as a hindrance. See it as an opportunity to trim down yourself and adapt yourself into a more competitive fashion that goes in line with international business practices.
Okay, thank you very much. I think it's been a very interesting hour. We've been talking about this topic almost an hour. I think it's very interesting. Personally, I'm not an expert, and I got very clear information about what is going on. Obviously, about the main idea that we have to wait, but that we have to be ready. It's very important to tidy up our financial statement, our structure, and everything, and see this as an opportunity to structure better well our financial statement and business in the region and everything. So thank you very much. All the attendees know that can contact you if they need some help in this planning or when the law is launched. So thank you very much, and see you soon, and see you, our attendees, in our next webinar, the 5th of April, about the Seguridad Social in Spain. All of we live here abroad and we have this topic in mind. Okay, thank you very much.